A former director of the National Economic Council, Gary Cohn, talked about the China trade talks on the Freakonomics podcast yesterday. Here's what he had to say.
So tariffs were used as a threat. Did it hurt the Chinese at all? We had record trade deficits.
So why do the Chinese seem to be, at least at this point, amenable, or is that smokescreen?
I think the U.S. is desperate right now for an agreement.
An agreement or a headline?
The president needs a win. The only big open issue right now that he could claim as a big win that he hope would have a big impact on the stock market would be a Chinese resolution.
Joining us now, Kevin Rudd, president of the Asia Society Policy Institute and former Australian Prime Minister. Kevin, good afternoon. Thanks for joining us.
Good to be with you.
What do you make of what Gary Cohn said just there?
I think he's right on. As if you know the mind of President Trump, he looks at two sets of polls, the opinion polls and this poll here at the New York Stock Exchange. And when he saw things heading in a bad direction come December, it became clear to me and most other people who follow this closely that since then he's been in the marketplace for a deal as a necessary injection to new confidence into this economy, but frankly the global economy as well.
Just to play devil's advocate, Gary Cohn left the administration because he did not agree with the trade policies, the tariffs that President Trump was going to implement. And when he says President Trump needs a win, sure, but doesn't China need a win more when it comes to this trade deal because they're suffering worse?
Well, I think the question here is what's in the mind of the US president and what's in the mind of Xi Jinping. On this president, my judgment is that he wants to see the economy backfiring again. He would have seen the slower growth in job additions in the last month. He's seen other economic indicators pointing to a slowing in this economy. So he wants a big shot in the arm for the US domestic economy. As for Xi Jinping, the causes of slowing growth in China are twofold. A bunch of domestic policies which have not encouraged the private sector to get on with expanding their operations, which have got nothing to do with the trade war, and the export sector, which is affected by the trade war. And so Xi Jinping, looking at this, would actually like to take this piece of lead out of his saddlebags, fix the trade war in order to provide a confidence boost for some other deeper structural problems and weaknesses in the Chinese economy.
And what's your read currently on what he's willing to concede on paper, through body language, through any of these, this kind of theatrics that's going to go on, assuming we get an agreement?
The Chinese substantive bargaining position is talk a lot and give nothing. But if you try and dig beneath the surface, I think the hierarchy of where they can give ground is obviously number one, market access, which is obviously adjustments to tariff regimes on agriculture that affects the United States, and also opening up the services market, including financial services. So that's where I think the most ground will be given. The second one where they're trying to give ground right now is on IP protection. You'll see that the Chinese right now with the National People's Congress are trying to put through a foreign investment law, which now has new criminal provisions within it for people who take the intellectual property of others unlawfully, either as officials or as corporations. So they're trying to, as it were, add on this question, but frankly there's an enforcement problem. But the other areas which are so difficult to resolve, state subsidies for Chinese firms directly competing with American firms, which goes to the structure of the Chinese state, and that's the hardest thing of all to move.
To go back to one of the topics we were just discussing with Jane about whether fundamentally tariffs can work, could ever have worked, will work in the future. What's your view on that? And does the fact that China's economy has changed shape, that exports as a portion of GDP has fallen a lot over the last decade, mean that maybe it would have worked better in the past than it is today?
Well, tariffs are a very blunt instrument. In terms of conveying a political message to Beijing, I think they've had that effect. If you ask me about the economics of tariffs, I'm one of those rare birds who, as a former Labor Prime Minister of Australia, a social democrat in this country, probably, a blue dog Democrat, I've always been pro-free trade because it's the best thing going for working people. Better that you pay $20 for a shirt than $40 for a shirt if you've got a limited income. That's the argument we've used in my country to bring that constituency over to free trade. So I think the president, however, who calls himself Captain Tariff, he's in the business of sending a warning shot across the bows to the Chinese. And to give him credit, He has engaged Xi Jinping's attention. The Chinese are mindful of the impact it's having on their domestic growth, which is sluggish anyway for other reasons. So I think as a piece of political communication, it's been effective. Rotten, though, long-term for the economy.
So, Kevin, whenever you want to know whether everything is right in the world, whether there's risk-taking and the global economy is doing okay, you look at the Australian dollar. And so far, it's not sending a message that everything's okay. If you look this week, even with big gains in U.S. stocks, or this quarter, or the last few months, it's down. What is that telling us?
Well, I think what it says from the Australian perspective, mind you, I live here, not there. And I haven't been back there for about 2 months.
Time to send some money back home, Kevin.
But what I'm saying is it often
make the most of the week.
We're not into being a
what's
foreign
happening in
remittance-dependent economy.
Yeah.
Yes. No. But the bottom line is, I think Australia, looking at the geopolitics of US-China, there's a deep new risk calculus in the way in which people are reading this. Secondly, where will the trade war go, and will the resolution penalise Australian exports of LNG into China long term because of the substitution effect? And I think finally there is a recognition in Australia, and maybe by investors, that coal is not a good long-term bet, and it's one of the principal exports, obviously for climate-related reasons.
So are you saying it's Australia-specific a bit, instead of making us worry about the world economy and world markets?
Well, I'm not a markets person like you guys here, so I can't comment on the history of us being a successful barometer for
You are, especially Aussie yen.
Well, where things are going. Well, we're naturally sunny people, put it that way. But I think these are reasons are also local and domestic, and there's a national election due in Australia in May, and so normally markets get a bit skittish when they get to election time.